According to the latest data from the Office for National Statistics, the average house price in London hit £540,000 in 2023. Now, that may sound like a but what's really alarming is the recent trend in house pricing. If you're someone who already owns a home in the City of London, or if you've been trying to get your foot on the ladder, you'll want to stick around for this one. Because the housing market in London is about to go through some dramatic changes, and millions of homeowners could be forced to sell their properties before 2026. So why is that? Let's break it all down. But first, make sure you are subscribed to the channel for important property updates in the United Kingdom. First off, over the past 18 months, we've seen a sharp decline of around 8% across the cap. In some areas, particularly in central London, prices have dropped even more. The once unthinkable is happening. Home values in one of the world's most expensive cities are falling fast. But here's the kicker. Experts predict this trend isn't going to reverse anytime soon. In fact, we could see even steeper declines in the next few years, possibly as much as 15 to 20% by 2026. And it's not just a small dip, it's a seismic shift that's going to affect millions of homeowners. Now, you may be wondering, why are prices falling in a city that's always been seen as a safe bet for property investment? Well, there are a few key factors at play, and it all starts with inflation and interest rates. The Bank of England has already raised interest rates multiple times in the past 12 months, and currently, the base rate sits at 5.25%. That's the highest it's been in over a decade. This has a huge impact on mortgage payments. If you're on a variable rate mortgage, or if your fixed rate deal is coming to an end, you're probably already feeling the pinch. Many homeowners are facing significantly higher monthly payments, sometimes hundreds of pounds more per month. It's not just the people who've bought recently, even those who've had their homes for years are now seeing their mortgage payments skyrocket. In fact, research from Zoopla shows that nearly 2 million homeowners across the UK will be moving on to higher mortgage rates by the end of 2024. With mortgage rates rising, borrowing money has become a lot more expensive. That means fewer people are able to afford the same property prices they could a year ago. Demand for homes is shrinking, and with fewer buyers in the market, sellers are having to lower their expectations. This is driving the price declines we're seeing in London. But the problem doesn't stop with higher mortgage rates. The cost of living in the UK has surged over the past couple of years. Inflation, which peaked at over 11% in 2022, has squeezed household budgets. Energy prices, food costs, and everyday expenses are higher than ever. With so much financial pressure, more and more homeowners are finding themselves in a situation where they simply can't afford their homes anymore. Some are even considering selling their properties to escape the rising costs. The truth is, many homeowners who bought during the housing boom of the last decade may soon find themselves underwater, meaning their mortgage is higher than the current value of their property. In a city like London, where wages haven't kept pace with the cost of living, this becomes even more problematic. Londoners are facing a double whammy: higher living costs and falling property values. This combination is leading to an increasing number of homeowners putting their properties on the market before things get even worse. So, what does this mean for the future of London's housing market? Well, let's take a look at the potential scenarios. If the trend continues, as many experts believe it will, we could see a massive wave of forced sales between now and 2026.